Hello and welcome to the second part of the first unit of Cost and Management Accounting. This part deals with the accounting system for materials. This episode also highlights the concept of material control and techniques of pricing of material. In addition, this episode also explains the treatment for material losses. I am Amrita Ghosh Kumar and the subject specialist for this episode is Dr. Tarannum Amer, PhD in Marketing and currently teaching in Satyavati College, University of Delhi. Let us begin with a brief introduction. Material is one of the most important elements of the cost. Material is divided into two categories, that is direct material and indirect material. Direct material are those material which can be easily identified like components specifically purchased for producing a finished product. Primary packing material, that is cardboard boxes, wrapping paper and so on, raw material and some other goods like this. Indirect material are those material which cannot be easily identified like oil and waste, consumable stores, printing and stationery, etc. Being an important element of cost, it is necessary to control the material properly from the time of order till they are actually consumed. An efficient system should be followed to assure smooth supply of each item of material. An efficient system of material control will also ensure reduction in the cost of production. The term material control is defined as the systematic control over the procurement, storage and usage of material so as to maintain an even flow of material and avoiding at the same time excessive investment in inventories. Now let us look at the procedure for material control. Material control involves efficient functioning of some operations like A. Purchasing of materials, B. Receiving of materials, C. Inspection of materials, D. Storage of materials, E. Issuing of materials, F. Maintenance of inventory records, and G. Stock audit. Number 1. Purchasing of materials. In a big organization, purchasing of material is a responsibility of separate departments, known as the purchasing department. This department is headed by a purchase manager. Purchase manager should have a good knowledge of market and should discharge his duties effectively and efficiently. In order to ensure effective procurement of materials, purchasing of materials should be centralized. This means that all purchases should be done by the purchase manager except for small purchases, which may be done by respective departmental heads. Secondly, full cooperation between the purchase department and other departments is necessary. Thirdly, purchasing involves financial liability. Therefore, purchase department should always have a close liaison with the accounts department. And lastly, proper purchase procedures should always be followed. Now, let us look at the purchasing procedure. There are some basic steps when it comes to purchasing material. 1. Receiving purchase requisition. The first step is to receive the purchase requisition from the storekeeper or from various departments. The purchase requisition is nothing but a formal written request to purchase goods or services. The purchase requisition is prepared by the storekeeper for regular stock items and by the departmental heads for special material or equipment. Purchase requisitions should be approved by an executive. 3 copies of the purchase requisition are prepared. The original copy is sent to the purchasing department. One of the copies is retained by the storekeeper and the third copy is sent to the costing department. The purchase requisition consists of particulars like quantity, quality and the date on which purchase of material is required. Number 2. Inviting quotations. After receiving the purchase requisition, another step is to invite quotations for the supply of goods. This is again done by the purchase department. Number 3. Purchase order. After selecting the supplier, the purchase manager has to issue a purchase order. The purchase order is a written authorization to the supplier to supply a specific quantity and quality of materials at stipulated terms. Purchase order is an important document which contains the date at which the material is to be supplied, name and address of the supplier, the description of material, terms of delivery, packing and dispatching instructions, terms of payment and so on. This document is to be signed by the purchase manager. It is the duty of the purchase manager to investigate the sources of supply so as to acquire the highest quality materials at the lowest price. Purchase order is also prepared in triplicate. The original copy is sent to the supplier, one copy is sent to the accounting department and one copy is retained by the purchase department. In some organizations, 5 copies of purchase orders are prepared. One copy is sent to the storekeeper or the departmental head and another copy to the receiving department respectively. Number 2. Receiving of materials. In small organizations, materials are received by the storekeeper. But in large organizations, receiving of materials is done by the separate departments known as the receiving department. The receiving clerk verifies the contents of packages with the consignment notes sent by the suppliers. 3 copies of consignment notes are sent by the supplier. Receiving clerks enter the date of receipt, quantity received by him and the condition of the goods in the consignment notes. The original copy of consignment note is sent to the stores department along with the material received report and the other 2 copies are sent back to the supplier. Generally, 5 copies of material received reports are prepared. The original is sent to the purchasing department and 3 copies are sent to the stores or production department along with the materials. The store or production department sends 1 copy each to the inspection department and to the accounts department. 1 copy is retained by it for future reference. Number 3. Inspection of materials. The inspection department is responsible to see that goods have been received as per the purchase order. If necessary, the samples of material may be sent to the laboratory for a test. 3 copies of inspection and laboratory test reports are prepared. The original copy is sent to the purchasing department, the second copy is sent to the stores or production department, and the third copy is retained by it for future reference. Number 4. Storage of materials. Proper storage system of materials is also very necessary to obtain the maximum advantage of cost of production. It is the stores department who is responsible for keeping the material properly. The function of the storage of material is performed by the storekeeper. Accepting, identifying, classifying as well as proper placing of materials is done by the storekeeper. In order to have efficient storage of materials, some points should be considered. Like A. Checking of materials. It is the prime duty of the storekeeper to accept the materials after proper checking. He should verify the materials with the relevant documents like consignment notes, material receipt report and the material inspection report. After verification, the storekeeper should send the copy of the material receipt report to the accounts department. B. Proper storage system. The storekeeper should arrange proper storage systems of materials. For this purpose, classification and codification of materials is necessary. The term classification refers to a process of arranging items into groups according to their nature. For instance, grease oil, cotton waste are classified as consumable stores, and copper, brass, iron are classified as metals. Each item of stores is given a distinct name. Classification prevents mixing of one type of material with the other. On the other hand, the term codification refers to the process of assigning a symbol or code number to items falling in different groups. There are three methods of coding, that is alphabetical codification, numerical codification and alpha-numerical codification. Number 1. Alphabetical codification. Under this method, each item is assigned alphabets which is similar to the name of the item. For instance, steel bars may be coded as SB, copper may be coded as C and so on. Number 2. Numerical codification. Under this method, each item of a material is given a number. The first thing to be done in numerical coding is to prepare a list of the various departments and then allotting a number to each department. A list of materials should also be prepared and each type of material should also be given a number. The first two digits of the code number may indicate the department for which the materials are meant, and the other two digits may refer to the name of the material as mentioned in the standard list. For instance, if the code is 2315, it means material number 15 or iron used in department number 23. Number 3. Alpha-numerical codification. This method is suitable for those organizations which have a large number of store items. Under this method, both alphabets and numbers are used. It is a combination of the alphabetic and numeric codes. For instance, iron steel stored in rack number 12 may be coded as IS/12. Bins and racks. Bins and racks are required to keep the materials properly. Bins and racks are the containers which are divided into several sections, each meant for a particular item. Each bin or rack should also be appropriately numbered and indexed for easy identification. Now let us look at the maximum and minimum level of material. The maximum and minimum level of material is decided to avoid over and under investments in material. The maximum level is the largest quantity of a particular material which should be kept in the store at any given time. Several points should be considered while fixing the maximum level. Firstly, storage capacity. Secondly, availability of working capital. Thirdly, seasonal considerations. Fourthly, the rate of consumption of materials and the time necessary for obtaining new materials. Fifthly, economic order quantities. And lastly, the cost of storage, insurance, interest on capital invested in stocks. The formula for calculating maximum level is maximum level is equal to reorder level plus reorder quantity minus in brackets minimum consumption into minimum reorder period. The minimum level is the lowest quantity of material which must be available at all times in the storeroom. The average rate of consumption of materials, reorder level and average time required to obtain delivery of fresh supplies are some of the points which have to be considered while fixing the minimum level. Minimum level may be calculated by minimum level is equal to reorder level minus average rate of consumption into average time required to obtain fresh delivery. Now let us look at the ordering level or reordering level. It is the point at which material must be ordered. It is fixed somewhere between the minimum level and the maximum level in such a way that the difference of quantity of the material between recorder level and the minimum level will be sufficient to meet the requirements of production up to the time the fresh supply of the material is received. Reorder level is fixed after taking maximum consumption, minimum consumption and lead time into consideration. Formula for calculating reordering level is reorder level is equal to maximum reorder period into maximum consumption. Danger level. It is the level of stock below which the material stock should never be allowed to fall in normal circumstances. It is slightly less than the minimum level. The formula for calculating danger level is danger level is equal to minimum consumption into minimum reorder period. Average stock level. Average level stock indicates the average stock held by an organization during a year. The formula for average stock is average stock level is equal to minimum level plus maximum level divided by 2. Reordering quantity. Standard quantity of material which is normally placed when the stock reaches the reorder level is known as reordering quantity. Economic order quantity or EOQ. The size of the order which gives maximum economy in purchasing any material is known as the economic order quantity. Number 5. Issuing of materials. It is the responsibility of the storekeeper to issue the materials. He issues the material only after getting an authorized material requisition note. Generally, requisition is signed by the foreman. In case of large quantity of materials, requisition must be signed by a higher authority. 2 copies of material requisition note are prepared. 1 copy is sent to the store and another copy is retained by the departmental supervisor who is originating the document. Now let us look at the bill of materials. The bill of material is a kind of master requisition listing all the materials necessary for a job so that the storekeeper can make available the desired materials and supplies required for a specific work order or job. The term bill of material is defined as the schedule of all the materials and supplies required to cooperate in the execution of the work order. 4 copies of bill of material are prepared by the engineering or planning department. 1 copy of each is sent to the production, stores and the cost department and 1 copy is retained by the engineering or planning department. The materials return note. Sometimes it is found that the material supplied to a job or department is more than required. In such a case, materials are returned to the stores with a material return note. It is similar to that of the material requisition note. Therefore, it may be printed in red ink. Materials transfer note. Sometimes excess material of one job is transferred to another job in the same department instead of returning back to the stores. In such a case, material transfer note is prepared to record such transfers. Number 6. Maintenance of inventory records. Generally, 2 sets of records for material received, issued or transferred are generally maintained. These records are maintained by the storekeeper in the stores and by the costing office. Now, A. Records by the storekeeper. Records maintained by the storekeeper are bin cards and stores material control record. The bin card is a card which is placed outside the bin or rack used for storing the goods. Whenever materials are received or issued, a notation is made on the card. The bin card also contains information relating to maximum, minimum, ordering level, code number, and so on. The bin card helps the storekeeper to control the stock as they provide a continuous record of stocks on each bin. Store's material control record is better than bin card, especially in the case of a large store, where various types of raw material are stocked in large quantities. It has all the details of material at hand. It is written up in loose leaf book or card file. In some organizations, the bin cards as well as store's material control record are maintained simultaneously. B. Records by the costing office. Store's ledger, material abstract, store's ledger control account and purchase journals are prepared by costing office. Under store's ledger, a separate account is opened for each kind of material and spare parts stocked in the store. Entries made in the store ledger are similar to that of the bin cards, except money values are also shown in the store ledger. Material abstract is an analytical statement of materials issued to different jobs. It is prepared on the basis of materials requisition slips. Store ledger control account may be opened in the books. The postings are made and the balance in this account should tally with the individual balance of different accounts in the store ledger. Purchase journal may be maintained in the cost office for facilitating postings in the store ledger control account. It is also useful because it also gives detailed information about the quantity and the value of material purchased together with the name of the suppliers. Inventory system. Inventory systems can be maintained by many methods. A. Periodic inventory system. Under this system, inventory is recorded at the end of the accounting year after making a physical verification of the quantity in hand. This system does not provide information regarding inventory at all times. This system is very simple and economical. The cost of material is obtained by adding the total value of inventory purchased during the year to the opening stock of inventory and subtracting closing stock of inventory. B. Perpetual inventory system. Under this system, the inventory is recorded after every receipt and issue. Thus, it is also known as automatic inventory system. Stock registers are regularly maintained. Therefore, it gives balance of inventory at all times. This system requires maintenance of bin cards, which gives quantitative perpetual inventory, and maintenance of store ledger, which provides quantitative value perpetual inventory. Another thing which is required under this system is continuous stock taking. Continuous stock taking is the process of comparing physical quantity with the quantities shown in the bin card and the store ledger. Let us look at how discrepancies are treated. Sometimes discrepancies between the store ledger and the actual balance of store may arise due to many reasons. Some of the causes are avoidable and some are unavoidable. Avoidable causes include 1. Entering transactions in the wrong bin cards, 2. Breakage and pilferage, 3. Overissue and underissue of material, and 4. Placing of stores in the wrong bin. Unavoidable causes include 1. Deterioration of materials due to climatic conditions, 2. Losses due to inherent nature of the material, and 3. Small defective units like screws and bolts. Now let us look at accounting treatment. Losses due to unavoidable reasons may be recovered from the cost of production either at inflated rates or by charging them to factory overheads. Losses due to other reasons should be transferred to costing profit and loss account. Number 7. Stock audit. The term stock audit refers to the physical verification of stock with the inventory records. Techniques of pricing of material issues. Generally, materials are purchased in anticipation of the demand. They are issued to different departments as and when material requisition notes are received. Now, the problem of pricing arises. It is because materials are purchased at different times with different rates. There are various techniques of pricing of material issues. The most important among them are number 1, first in first out or FIFO. Under this method, the materials first received are to be issued first. It does not mean that the physical disposal of stock is to be issued first. It means that units issued will be priced at the oldest cost price listed on the stock ledger. This method is simple and easy to operate. Materials are issued at the actual cost and valuation of closing stock is done at the prices nearer to current market prices. Number 2, last in first out or LIFO. Under this method, the materials last received are to be issued first. Materials are issued on the actual cost. Therefore, the cost of production is more realistic under this method. Number 3, average cost method. Under this method, the price is calculated by dividing unit cost of material by the total number of prices. Number 4, weighted average method. Under this method, weighted average is calculated by dividing the total cost of goods in stock by the total quantities of stock. Now, let us look at the treatment of material losses. 1. Waste. There are two types of waste, that is normal waste and abnormal waste. Normal waste should be distributed over goods output. Thus, cost per unit would be increased. Abnormal waste should be transferred to costing profit and loss account. Number 2, spoilage. The cost of normal spoilage will be borne by the goods unit. Abnormal spoilage should be transferred to costing profit and loss account. Number 3, defectives. In the case of normal defectives, the cost of rectification, if possible, should be charged to specific jobs, otherwise to the works overheads. Abnormal defectives should be transferred to the costing profit and loss account. That is all we have for you today in this episode. Hope you have understood this unit. We'll see you again very soon with another topic on cost and management accounting. Till then, take care and bye-bye.